I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. Could Ethereum do 100x? I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. Well, I think the near-term price people should think about is Ethereum getting to 4,000.
Tom Lee begins with a clear and confident endorsement of Bitcoin, reiterating a familiar yet still radical prediction. Bitcoin can reach $1 million to $15 million per coin. His data shows that early investors who followed Fundstrat's advice, allocating just 1% to 2% of their portfolios to BTC, saw returns that turned that sliver into 100% of their portfolios. That kind of upside isn't luck. It's a structural realignment of value in the digital age.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
First, I'm a big fan of Bitcoin. I think Bitcoin is the way, and our work on the Fundstrat side shows Bitcoin can get to the $1.5 million per coin. So Bitcoin still has a huge story ahead. Yeah, but Bitcoin and Ethereum operate in different parts of how the world is financializing. And that's a principal difference to me, because Ethereum represents the world financializing onto the blockchain, which is not Bitcoin's goal, and the AI world, creating basically a digitally native way to bridge the real world and digital security. As you know, in the last 8 years, Bitcoin has the biggest narrative is it's digital gold. It's a store of value. Of course, it's a great payment system, everything else, but really what's resonated is that there's a group of people that own gold, and we did studies back then to show gold was primarily owned by baby boomers. So millennials would own Bitcoin the way boomers owned gold. So it was a generational story on top of a, digital substitution story. But as you know, Bitcoin now is 120,000. So it was 120x. Our clients that invested in and followed us, because we recommended 1% to 2%, for some it became 100% of their portfolio. So they've gone full degen as a result. And I think that's happening with Ethereum today, because Ethereum's been kind of a dormant chain. People wanted faster networks, or more novel ways to do essentially validation, but Ethereum's had zero downtime. That is what matters to Wall Street, zero downtime in 10 years. So I think that Wall Street has already decided Ethereum is the chain they're going to build Wall Street onto, and it's lower than it was 5 years ago. I actually think that there's a bigger upside story to Ethereum, because there's more skepticism to start with. Bitcoin wasn't necessarily something people shorted, they just didn't believe it. And so the upside case, when we wrote about 100,000 in 2017, it seemed insane, but it didn't take that long from 2017 to now to get there. It was within our lifetimes that it was 100x. And Ethereum, I think you're hitting it spot on, is just like Bitcoin in 2017. Wall Street is not professionally convinced Ethereum is even a surviving chain, because there was some fair criticisms, and it did move to proof of stake, and there might have been too much ETH out there for a bit of time, but it's being fixed. And there's still skepticism that Wall Street going onto ETH, they're even going to stake ETH or even use ETH. Everyone's kind of there are probably more people who think that it's a layer 2 story and nothing benefits the layer 1. And I think that that's what's going to be shattered. And when it does, it'll be a step function. So I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. Could Ethereum do 100x? I mean, Joe Lubin sort of has that kind of upside in his mind, because Joe and I are in dialogue. I mean, we are really partners in trying to push ETH as a treasury, as a digital infrastructure. And I think that that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. And then, so then if you're, if someone thinks Bitcoin's at $1 million, then imagine what it means for Ethereum, because it is not just Wall Street financializing onto blockchain, but it's AI, but it's also part of the US focus on AI dominance, right? Ethereum plays a strategic role there. Now, if MicroStrategy had triple the upside of Bitcoin, then that means, in theory, the Ethereum treasuries could triple whatever Ethereum could do. So, I don't think you're going to go wrong saying that the Ethereum treasuries are a good investment class. But if you're looking at what BitMine's doing, it's those other things I was saying distinguish it. And that's why, maybe we will be at the front end of that. But they should all do well because Ethereum itself is undervalued. Well, I think the near-term price people should think about is Ethereum getting to 4,000. Because Ethereum is a better story than it was in December, and it was 4,000 in December. So to me, we should at least recover to that level. And then Ethereum is a better story today than it was a year ago. And a year ago, Ethereum was at 0.05 ratio to Bitcoin. Right, to me, it's a stronger story, and there's reasons people are using Ethereum. So it's like a narrative. Well, at 0.05 Bitcoin, it's like almost 6,000. So just like saying, give it credit for where it is a year ago versus a year ago, it should be 6,000. But of course, there is going to be a lot happening between now and year end, including, other Ethereum treasuries starting to buy Ethereum plus Bitcoin goes up. So I think by the year end, it's not unreasonable to think 7,000, even 12 or 15,000 could happen.
Lee offers a grounded near-term target for ETH $4,000 in the short run, based on its performance in December last year. $6,000 when priced against historical BTC ETH ratios, and potentially $7,000 to $15,000 by end of year 2025, based on macro trends, institutional inflows, and rising liquidity. Further out, with dovish central banks and institutional staking on the rise, Lee hints that Ethereum's price could enter a step function phase where value jumps exponentially due to structural shifts.
Of course, from there, then in 2026, the Fed starts to follow through on what it should be a dovish pivot. So central bank liquidity is rising. And so Ethereum should build upon those price levels. I don't know if there's a crypto cycle. There should be. It would play in our favor because, again, we'd rather Ethereum. I'd personally think that an Ethereum treasury company wants Ethereum to be flat for the next 5 years and then go up a lot. But it's probably not. It's probably just going to have a step function. But again, just to give you an idea, when I first wrote about the S&P in 2009, S&P earnings were $65 in 2007. And I built a model at JP Morgan that says we would get to $60 by 2010. Okay, so remember the stock market fell almost 80%? I don't remember. We had a huge decline. And every strategist didn't have a recovery to all-time high in earnings for 5 years. And so the buy side was very skeptical of the idea of $60 by 2010, but that would imply the S&P was at 10 times earnings at the bottom in 2009. And lo and behold, S&P earnings was over 60 by 2010, okay? And today S&P earnings are 300. So S&P earnings have grown exponentially. That's just the traditional corporate world. So the idea that crypto's network value could be 20 trillion for Bitcoin, we witnessed it in our lifetimes with equities. So, and also crypto treasuries are asset-based, valued on their balance sheet. MicroStrategy is valued really on its balance sheet, not on its earnings power. Keep in mind, from 1990 to 2018, okay, so one full generation of someone's career, ExxonMobil was the top 5 largest company in the S&P 500 for that entire period, 1990 to 2018. There was internet and all that, but Exxon was top 5. it was never valued on earnings. It was always priced to proven reserves. So crypto treasuries are just the new Exxon. Well, MicroStrategy is 3.2% of the network's circulating supply right now. And, but, MicroStrategy wants to get to at least 1 million Bitcoin, which is about 5%. And keep in mind that once MicroStrategy has 1 million Bitcoin, they have a sovereign put. They are strategically important to the Bitcoin ecosystem. I mean, if the US wants to create a strategic Bitcoin reserve, it's probably difficult for the US to buy 1 million Bitcoin in the open market, because as soon as they announce it, sellers are going to shrink and, Bitcoin could go to $1 million right away. So MicroStrategy might be an easier way for someone to get to 1 million Bitcoin. So I call that a sovereign put. MicroStrategy's achieved the 3% in 5 years. So they were buying basically 16 cents worth of Bitcoin a day, every day for the last 5 years. Bitmine if you look at it from inception to now, has added about 80 cents to $1 per day in Ethereum. So it's about 12 times faster than MicroStrategy. So we would be on a path to get to 5%, presumably like at 12 times the speed of MicroStrategy. But it makes sense because, we would be a benevolent entity in the sense that we are doing everything 100% compliant with what is the idea of a legally compliant. Ethereum is a legally compliant blockchain, and everything that Bitmine is doing is keeping every single piece of the operations in the United States. So it is very compliant to what Wall Street and the US government would want to see in someone who's staking a lot of ETH. And equally important, ETH itself is going to be really where so much of Wall Street financializes on the blockchain. So eventually, I think someone on Twitter made the point that staking ETH for Wall Street is like gamers buying NVIDIA, that you would have done better to buy NVIDIA as well as be a gamer or be a gaming company. But because of really how blockchains work, it is actually that exact idea that Wall Street is, if they're going to be tokenizing real world assets from money markets to dollars to stocks, that they're going to want to own ETH itself, but then they want whoever's staking it to actually be an entity that is really trying to further the goals of Ethereum. So I think we really serve an important purpose by staking ETH.
Tom Lee's thesis is clear. Bitcoin and Ethereum are not competitors. They are parallel narratives in the story of digitized value. But if Bitcoin is gold, Ethereum is the internet of finance. Wall Street, governments, AI platforms, and developers are all converging on Ethereum, not just as a platform to build on, but as a core reserve asset. And if Lee's forecast holds, if Ethereum becomes the financial engine of tokenized assets and AI, then today's skepticism is tomorrow's generational buying opportunity.